Am I ranting too much?
No.
You're not being honest with me, Brad? Is that what's going on?
No.
What is up, everybody? I'm Jason Trost, the host of the Business of Betting podcast. I am joined with a journalist who I've known for quite some years now, Brad Allen. He currently writes for the Legal Sports Report, and I'm really personally enjoying having him on the podcast because A, he's got tons of opinions, but B, it'll be nice for me to be asking the questions for once and sort of turn the mic around. But very much looking forward to having Brad on. As I'm taking over the host of this podcast, I'm experimenting with different formats. We've done the bio format. What I thought we could do today was kind of kick around some of the big news that's been happening with Brad. There's a few big news stories. There's one, Jason Robbins commenting on social with BetBull leaving the market, or Wynn shutting down BetBull rather, and PointsBet doing a deal with Susquehanna, amongst other stories. So, Brad, welcome to the podcast.
Hello, Jason. Thanks for having me on. You must be getting thin on guests already if you've turned to me after
very
4 episodes.
Very thin. So you were my last choice. So thanks for coming on. So so I don't know which story should we kick off with. Let's start with the social. What do you make of? Well, why don't you start with the headline for those that aren't familiar with BetBull and Wynn and what's going on there?
Yeah, so this is news that Wynn shut down BetBull. They acquired them back in 2020. And they basically made BetBull the foundation of their US business, Wynn Interactive. They put about 80 million into that joint venture. And then Wynn owned 71%, former BetBull owners held 29%. But then it came out this week that BetBull was shutting down. And my understanding is that was a Wynn decision. I think the idea is that BetBull was losing a fair bit of money. Now, I can't be sure exactly how much money because obviously Wynn's a public company. They're not going to say that kind of numbers until probably their next earnings report. But I think, sort of 10 million plus was one of the figures floated about. And Wynn has obviously said in the US they want to stop losing money on sports betting. So I think they're probably looking at their US business, which is, it's still one of the smaller ones. It's still losing money itself, and they're looking at this UK business also losing money. And I think they've gone, why are we spending money on it on a UK business that's probably not growing? The UK market is, as you all know, is very tough, especially for smaller companies. So why are we losing money in two places? Why are we not focusing all our money on WynnBet in the US, where we've got probably got a great brand, and as casino comes online, that they can plow some resources into that, plow the money into that, and probably long term it's a better business.
Just to be fair to Wynn, doesn't every sports betting company in the US lose money?
Yes.
I mean, I think everyone is losing. I don't think anybody's making money in the US.
They were one of the first to come out and say this is silly. We don't want to be involved in this marketing race, and so they stopped throwing money at it to the same extent on marketing, and they pivoted it a little bit. I think two ways. One was, you might have seen the live stream they did opening NBA lines, to make themselves a bit more of that circa light, you could almost call it, kind of the sharp sports book, like this is the trading room, this is us coming up with our lines. Mm-hmm. And then the other thing I think they're doing is trying to be a bit more VIP focused. Again, I think that comes with the WynnBet brand, right? They're a place for high rollers. So I think that's the other part of the plan there.
So I've never used BetBull, but I've seen the interface, and what really kind of struck me is it felt like quite a jokey approach to sports betting. It kind of had that Candy Crush. What's that game everybody plays? Jewel. Like you get diamond points and BetBull was noticeable in the sense that, and this kind of will lead into the second story actually, but it was notable in the sense that it was first trying to gamify and socialify the industry. But I always thought it was missing the mark, trying to turn sports betting more into like a social game. Did you ever use it? Do you have an opinion on their approach to sports betting?
I never used it. I think sort of the feedback I've got since this story came out is that one of the problems is, okay, you're in these groups, you're all jumping on a 8-team ACCA on a Saturday football, but obviously everyone's going to lose doing that. And so if you're paying, what you're going to lose doing 8-team ACCAs on a Saturday, you're going to lose double-digit percent, say 20%. And if you're just following someone in on the group, for fun, for banter and whatnot on a Saturday, yeah, maybe it's fun for a week or two. But when you just keep losing all your money, how sustainable is that? And again, one of the things from the win side of this, I think, is that maybe it works, this kind of smaller staking, accumulator bets, if you're already at a massive scale. But if you're already a small company like BetBull and you're not getting big stakes in, everyone's betting a tenner. Like, it's just a tough way to run a business, right?
No. And do you remember what year BetBull was bought out by Wynn? It was like 3 years ago, something like that.
They acquired the controlling stake back in 2020, but I think they started working together back in 2018. I think that was on the front end stuff. I think a lot of the WinBet front end in the US is BetBull tech, and they've got sort of a Frankenstein back end solution from various.
Well, speaking of the Frankenstein back end, like one of my pet opinions in the industry is that the technology is terrible in sports betting, and almost every major operator outsources key parts of their technology. BetBull, as far as I understand, and please correct me if I'm wrong, listeners, is that they outsource the betting engine. I think it was IGT or something like that. But basically, BetBull is just a front end interface on top of on top of a third party sportsbook, which made it even more, from my perspective, confusing that Wynn would go try to buy this, because they weren't really buying technology. They were just basically buying Bejeweled. That's the name I was looking for. Bejeweled interface to sports betting, which I might want to pay a little bit less than $80 million for a Bejeweled interface to sports betting.
Yeah, well, I think there's also been a change in leadership at Wynn Interactive, at Wynn itself. I think both have different CEOs now. So I do wonder if, I think Ian Williams is president of Wynn Interactive now. I do wonder if he came in and said, "What have we bought here for 80 million? Wow. We've got a UK business losing money, and just some front end tech, which I guess is probably the easiest part of the tech stack to recreate."
Yeah, exactly. And you keep your ear closer to the ground than I do. Do I remember a story that Wynn announced that they were getting out of sports betting, or they were trying to sell their sports betting business?
There was a New York. They definitely shopped it. They definitely shopped the interactive business. I think the report was they're after like 600 to 800 million US dollars, and it sounds like no one was willing to pay that, essentially. So
sounds nice.
Yeah, so they pivoted that strategy. They said, right, if no one's going to pay it, what can we do with it? And they sort of went through that strategic change we talked about earlier, where more focus on VIPs, more focus on casino gaming, just stop throwing money away on advertising in the short term, especially while gone.
And maybe this is where I come at this industry from a completely different perspective. But I've been to Wynn in Vegas. It's a beautiful property. It's one of the nicer casinos, of course, by far, on the Strip. And to me, Wynn is a master real estate company. They build beautiful real estate. They sell condos, they sell apartments, and they sell entertainment around people going to visit those. And that has nothing to do with sports betting. So to me, the idea that Wynn would even try to attempt to get into the sports betting industry, it's sort of like Mercedes deciding that they're going to manufacture pools or something. Like there's such different businesses, sports betting with the real estate industry, that I think one of the giant misconceptions, at least in the American psyche, is that it's just an add-on to a physical casino, and sports betting really is more closer to finance, trading, hedge fund world than it is to real estate, property, slot machines, entertainment. So I think, of course there's many companies that can do successful industries well, like Comcast is one of those that has different major verticals of industries, or, GE was another company that could do that. But I don't see a lot of these casino brands, being able to successfully do a digital product in a digital age with a financial engine under the background. Do you agree with that perspective, or do you think that a well-funded, well-branded casino can play well in the sports betting industry?
I think so. The approach you're talking about, I mean, I think Las Vegas Sands is quite interesting because they're one of these casino giants which has gone, nah, we're not going to try it, and they've said what we're going to do. We're going to invest in B2B suppliers to the industry. So they've invested in US Integrity, which obviously does the integrity monitoring. They invested in Huddle Tech, which is trying to provide some back end tech for sports betting, and they've sort of gone, well, okay, our brand is casino gaming. We're not going to try and be experts, which is probably definitely the safer route, right? Instead of lose, I think Wynn probably lost $100 million or something on sports betting last year for like 1% market share. So I don't know. As I say, they're still giving it a go. They still think they have something long term. But I guess, yeah, we'll see. I would probably say that the Vegas Sands is looking shrewder so far.
Yeah, I definitely think that's a smarter approach. But in my humble opinion, I think casinos should stick to what they know, which is real estate entertainment. And it's not sports betting. Well, talking about social apps, Mr. Robbins was in the news this week in an article that you wrote, and I saw Richard Flint kind of comment on that. I'm not one that necessarily agrees with Jason Robbins very often. I think he's spot on with his quote. I think that the major players in the UK really haven't tried it. I think we've tried it around the edges, but we've never really given it a serious go. Do you think that he's right? Do you agree with his quote?
I'd like to get your opinion in a sec. Because obviously,
Yeah.
Smarkets has social features in SBK, so
Yeah.
I'd like to hear what you think. I think Richard's point is they did try. They spent a lot of time on stuff like TV betting and then Skybet group bets. So Jason Robbins. Well, if Richard Flint says they did, then I'm going to say they didn't
try.
Right?
I'm not saying they didn't try, but I don't ever remember reading about or people talking about Skybet group betting. I've never heard anybody like Skybet has had much success over the last 10, 15 years. It's probably one of the bigger, growth stories over the last couple of years. And it was never part of the narrative that social was the driver of that. It was the experience. It was the brand. It was the pick six that they do, which is quite successful. It's all these kinds of things. It's never around social.
I think that's because it didn't work. So we covered the launch of it at EGR, Skybet Group Bets, when they did that, I don't know, say 5 years ago now. And I tried it. I formed a little 3-person group, and it's just we did it maybe 1 week or 2 weeks and just stopped using it. And I suspect that was the case for everyone. It just wasn't a good experience. Like there was no need for it essentially. And I suppose when Jason Robbins was asked that question because DraftKings is doing their own social things and they have a thing called bet groups, right? It's almost the exact same thing. I think that there's two key parts of the DraftKings social things. One is the bet groups where you can, you all be on the same bet again, a bit like BetBull, which has just died. And then the other part is the social feed. Again, I'm betting this, follow, fade with one click kind of thing. Which I suppose that's a bit more like the SBK thing. And I just, I'm not sure. I feel like a lot of companies have tried it and it's just not taken off. That's why Skybet was never known for it, because it just didn't make much money for them. It wasn't a big feature in the end.
Yeah, I mean, my take is that social absolutely has a role to play in sports betting. I think the reason it hasn't is because the right alchemy of technology, innovation, and the right kind of people haven't worked on the problem. But if you take the offline experience of somebody placing a sports bet, there's nothing that person wants to do more than talk about their bet, like who they have, what they got, like why they think that's right. Sports it's an inherently social thing. Even the person that will sit home, watch the basketball game by themselves wants to call their buddy that they know is also watching the game to talk about what they think. So you have that kind of aspect of betting where it's inherently social. Like people want to talk about their bet. Now, on the other hand, I started as a stock trader, and the thing I noticed with stock, when I was a kid, I would trade very, very, very small stakes. I would trade stocks, like 50 shares, 100 shares kind of thing. But when I got to this trading firm, people didn't want to shut up about what they were buying and selling. Like traders are, you kind of think about, if you're not from the industry, you think about buying and selling shares as like dollars and cents, financial rationale, all that kind of stuff. But really, the social underpinning of human psychology is the big force that moves markets. And so it's really important to understand the sentiment in the market when you're buying and selling stocks. So to me, nobody really thinks about like this, but the first real social network in stock trading was CNBC. So it's very similar to sort of keeping a soccer game or a football game off in the back, like the background noise, and like listening to the tone of the announcer to know if it's something worth watching or not. So there is something inherent in stock trading. There's something inherent in sports betting where people are craving that sentiment knowledge, whether it's from an experiential point of view, whether it's from a financial point of view. Now, I think the big failure is going back to what I was saying about the alchemy. I don't think the right people are working on the problem. Like, no disrespect to Skybet and the other major players in the industry, but they're not technology companies. They're not. They're marketing companies. They're very, very good marketing companies. But at their core DNA, they're not technology companies. And I think that's the big reason, like, we just haven't seen good products at it. I would also say Draftkings at its core is not a technology. FanDuel at its core is not a technology company. Wynn, of course, Wynn is another example. They're a real estate company. So am I ranting too much?
No.
You're not being honest with me, Brad? Is that what's going on?
No.
All right. What do you think of that, Brad?
I would say two things. One, I guess, as you say, everyone wants to give their opinion, but do other people want to hear it? Like, do you care what some random bloke on DraftKings has just bet? Because I don't, unless he has a long-term track record of being a winner. And I think like this might be why things like BetBull have failed, because yes, it is great fun to win together, but ultimately 98% of people doing this are going to lose. And losing together is not fun. Losing, like giving people bets and they lose, or following people who lose is the opposite of fun. Like, I'd say most people would rather lose a bet on their own opinion. Like, nothing feels worse than just losing a bet because someone else told you to bet it, I feel like. So, I just think that's the core problem. Like, eventually we're all going to lose, and if you're losing on someone else's opinion, it feels even worse than losing on your own opinion.
I agree with that, but I think that has to do with the innovation, the model, the social model. If you take TikTok, Twitter, Instagram, Facebook, all these different kind of social media platforms, they all have different models. Some are private, some are public, some are follow model, some are, WhatsApp is a very one-on-one communication mechanism, whereas Twitter can be used as a broadcast mechanism. It could be used as a niche mechanism. So I don't think the industry, and Smarkets included, has nailed that kind of what the right social metaphor is in the industry. Personally, I think it's a mixture of finding people who you think know what they're doing, people who are super fans, and I'd be interested to know what super fans think, and I'd also want to know what my friends think. Yeah,
I suppose the problem's always been, if I can find that right now on Twitter or Reddit or Discord or whatever, like, I'm in a lot of dedicated sports betting Discords. So is it, I just think it would be tricky. As you say, these are sports betting companies with a million other things to do. How are they going to recreate Discord in their own platform? I assume that's going to be a massive task.
Yeah, totally. Awesome. Let's pivot to the next story. Susquehanna buying a significant minority stake of PointsBet. In rough numbers, they bought about 12% for about $65 million. Do you want to set this story up for the listeners, rather?
Yes. So Susquehanna, obviously a giant kind of Wall Street trading firm. As I was reading one of the stories this week, and they said if you've ever bought a stock on Robinhood or E-Trade or eToro, you've probably traded against Susquehanna. They're just a huge market maker in that kind of thing. So they bought about 12% of PointsBet, and for 66 million. And one of the interesting parts of this was that one of Susquehanna's subsidiaries, Nelly Analytics, which is basically a sports punting group out in Ireland at the minute, as part of the deal, they are going to be sort of attached to PointsBet's own trading unit, Banach Technology, and they're going to have a 9-month trial period to see if Nelly can bring any, if they can help out on the live product, essentially, whether that's sort of live odds by the sounds of it, whether they can sharpen up the trading. So just a quick quote from PointsBet CEO. He said that this deal would give PointsBet more accurate lines and sharper risk management, particularly in play. This will flow through to our customers in the form of higher wagering limits, less price suspension, faster bet placements. So yeah, they're basically attaching Nelly Analytics to PointsBet to see if they can improve their live betting product.
Yeah, totally. So for full disclosure, Susquehanna is one of our major investors. So, definitely have experience with them. So I've talked to the Nelly guys. They're really smart guys and have done a lot in sports betting. I think one of the big things going on here is, something that people don't talk about, which you alluded to in your introduction about the story, is that order flow is king here. So there's a few different aspects to making money in sports betting professionally. One of those aspects is you have a model or price, and you want to buy low and sell high in the classic trading sense, and sports betting is no different. You want to guess what the right price is, and you want to buy low and sell high. Fundamentally speaking, there's two ways to do that. There's a technical model and a fundamental model. Technical model is you look at what everybody else is trading and take a view. Fundamental model is you understand the basics of the sport, and you have a computer algorithm that tells you what the right price is. That's really a big chunk of sports betting. And I think when a lot of people talk about betting syndicates and trading companies, they think of that aspect of the trading company. But I think one of the really, really important aspects of sports betting is that you make money trading against retail flow. Who has the retail flow? It's sportsbooks. And sportsbooks don't have some nice little API that you can go plug into and say, hey, I want to trade against a PointsBet customer. So what I think is happening in this deal is that, and I should state, I have no inside information. I was not involved in this at all, and I was not consulted at all in this deal. So this is my outside opinion, is that Nelly needed access to retail flow, and this is a really good way to try to do that. So that's my take on this deal. And from an equity point of view, I think PointsBet is down 70% from its peak, and they probably thought that the stock is much more reasonably priced than it was a long time, about a year ago. And it's a relatively cheap way to try to experiment with getting retail order flow. What do you think about that?
I agree. I think that is part of the thinking here. But my thought is, I feel like PointsBet didn't want it. I feel like Susquehanna said, "We've got 66 million for you, but we want these guys, in your trading room, maybe access to order flow, that kind of thing." Because the deal is, it's a 9-month trial period where Nelly is basically working for free. Yeah. And then it's, then they can expand it to a full-time 3-year deal. So I do feel like PointsBet accepted this grudgingly. Like talking to people who know both of them, right? They're both sort of Dublin-based, Ireland-based, sports betting syndicates. I think people I spoke to had worked with them both, and they said Banach has a very specific way of doing things. It's very automated. That these are the processes, we stick to them. Whereas it sounds like Nelly is a bit more opinions based, a bit less automated, which to me is they're not necessarily going to fit together. So it'll be interesting to see whether this is extended into a full-time deal or PointsBet sort of tries to wriggle out of it.
Yeah, that's a good point. Like the market-based way to do this would be to let Banach and Nelly trade with each other and compete on price, and whoever has the best price gets it. But that's not how sportsbooks work. I mean, that's one of the big shortcomings of sportsbooks, is that generally there's one price, one seller, and you can get the hell out of here if you don't want to trade it. You can't trade a sportsbook. It's a limitation of the technology. I would guess that if they have two in-house trading companies, there will be competitive tension, because there's no marketplace dynamics. Like some project manager or some account manager is going to have to make the call who gets to make the price in this market.
Yeah, I wanted to get your take on this quote from Susquehanna co-founder Jeff Yass. He said, this deal is a bet that customers will eventually find the apps with the best pricing, and SIG, Susquehanna, is good at pricing. That's our bet, that the best price is going to win. If it's a marketing contest, Susquehanna doesn't add much value. Now, I know that's kind of your point of view, right?
Mm-hmm.
But we've not necessarily seen that in Europe.
The pricing dynamics driving new
Yeah,
behavior.
the pricing's king.
I think, and I'm going to talk about this from my perspective. I'm not the host of this podcast to promote my business whatsoever. So I just want to say that. But the reason, SBK often has the best odds in the world. And, I like to think like the tier 1 stuff, we have the best odds in the world. The tier 2 stuff, tier 3 stuff, sometimes we don't have a price. Sometimes we don't have a market. And SBK, the product drops the ball in the long tail. The big stuff we do really well on. And you can see that in the odds checker data, our click share is going up and up over time. So I think we're building that kind of that industry awareness that we have the best price. The reason I think odds hasn't taken over yet, or the prices being the big driver, is because I don't think anybody like us has found the right product market fit for the price to be a driver. I think SBK doesn't have enough features that people expect, like something that every other bookmaker has except us is Lucky 15, for example. So if you want Lucky 15, you can't use SBK. So my hypothesis is that long-term it will win. Long-term it will win in the UK, but you also have to have that kind of that 1.0 experience that everybody else expects, and SBK has not made that mark. Yeah.
Yeah, I mean the other big thing Jeff Yass is big on is that sports betting is financial products, basically, or he thinks there's the two of them are going to become much closer together. Yeah. I think he said, what did he say here? He basically said the same skills that's needed to price options is the same skills that's needed to trade a book. And that's what do you think that's something we might see in the US, that it's more of a financial style product, say low margins, high volume, more than like the European model of a £10 acca on a Saturday?
Yeah, and just for full disclosure, I've had many conversations with Jeff about the industry. Like I said, he's one of our investors, so this is an area I completely agree with him. This is why I founded Smarkets. My co-founder and I were from the financial industry. My co-founder worked at Wolverine Trading, which is a pretty big option market making firm, and I came from UBS and a small trading shop in Chicago. So I 100% believe that sports betting should be treated like a financial product. I think you don't have to be a magician to see that price really drives a lot of customer behavior long term in finance and all industries, really. I was just trying to buy some it's a small thing, but I was trying to buy some accessories for my car, and you go on Amazon, you price compare. They have all the third party sellers, and I want to pay less money for the thing I'm trying to buy. So it's not, you don't have to be a rocket scientist to see that consumers are driven by price. What has confounded me is that the industry has, I wouldn't say it's not collusion, but it's kind of this like, it's more complacency that this 5, 6, 7, 8% margin is just part of the game, and like we just all have to deal with it. I think it's my theory is because companies like us haven't gotten to scale, and there's not enough new entrants and new blood in the space to kind of make this happen. But I think with the new expansion of the U.S., the increased investor interest, the increase, Silicon Valley has still sat on the sidelines by and large in sports betting. But I think if you ever see Silicon Valley really, or tech investors really embrace sports betting, that's when the floodgates will open and price will be the main driver of this.
Yeah, maybe if California legalizes sports betting, we might get some more interest from Google and Apple and co.
Yeah, I don't know if they'll ever get involved, but I think you'll see a lot of what's the right word? Sentiment shifts. Like sports betting has always been kind of a dirty word in the U.S., and I think that's changing. Especially like as ESPN starts to do. ESPN's always been a very strong family brand. If ESPN and Disney can continent sports betting, surely the attitudes have changed briefly or widely. So last story I want to talk about. Why don't you talk about Tipico, Fanatics, and that story?
Yes, so the CNBC reported yesterday that Fanatics is in talks with German sportsbook Tipico. And obviously, Fanatics has been linked with just about everyone as it looks to get into US sports betting. we had a story a while back that they were very close to a deal with Amelco. Now, again, this is just talks, so I think I think they're just talking to literally everyone possible out there. So I think they've been linked with PointsBet, Betson, maybe even Bet Rivers, as I say, Amelco, and now Tipico. I guess a couple of things off the bat. One is that Tipico was valued at 1.5 billion like 6 years ago, and it's the market leader in Germany. So I can't think it's going to be, I would have thought it'd be double that by now. And Fanatics, I think, only had recently raised 1.5 billion, so it might need some more cash to get that deal done. Obviously, market access is one of the big things for Fanatics in the US, especially because it needs 10 licenses to be eligible for another license in California, and it's giving a lot of money to that effort. So as far as I can make out, Tipico's got at least 4 licenses, and it's got a deal with Caesars that could potentially give it a few more. So that's going to get Fanatics a lot of the way to its 10 license limit that it wants. And then technology is probably the other big one. Tipico's got its own stuff in Germany. And I think they're only live in New Jersey and Colorado so far, so not really made a dent in the US yet. I would say one of the things we've seen with these companies like Bet365 and Tipico, who are sort of market leaders in their native land, is they seem to have had trouble moving the tech stack over to the US. I think because you need to basically rebuild it in each state, right? So if you've got a big clunky tech stack, it seems to take these companies a few years to recreate it.
That is something I have direct experience with. There's something called GLI 33, which is a very annoying, well-intentioned, very annoying document that is sort of sets up the standards. I think Nevada pioneered GLI 33, and some states have adopted it, some haven't. For example, Colorado follows a version of GLI 33, where Indiana has a strict version of GLI 33. And so what you have to do is take your tech stack and you go to, this is if you own a tech stack. This is, I guess, a roundabout one of the benefits of using a third party, because the third party will, if you use Canby, they'll have done this for you. But if you own your own tech, you have to go to GLI and get it certified. And, there's 2 or 3 companies that will certify this for you. But very, very frustratingly, they're all different. They have very micro requirements. This state will require you to get logged out. This one requires notification under this change. And it can be very much a death of 1,000 cuts, and it is very painful. Payments is another thing that's very painful. It's also state-based. You have to have your infrastructure located in the state. You have to have your payment agreements in the state. You have to have your software certified in the state. So I think this is a huge area where America has really screwed up. I really disagree with a lot of the approaches of the state regulators and the state legislators. And I think the better model personally is the UK model. So, I sympathize with a lot of these operators being very slow to roll out in the US, because I think it's very poorly set up.
Yeah. Quick side note. Did you see Colorado's regulator got a rap across the knuckles recently for not enough due diligence on its operators?
I didn't see that. What was the story?
It was a state audit of the regulator in its first couple of years, and they basically said they hadn't done enough due diligence on most of the operators because they just gave them all temporary licenses. So I was going to ask you your experience.
Like, I feel for a lot of these regulators, because most of them come, and this is another thing, this goes back to Wynn trying to do sports betting. It happens on the regulation side, where people take physical casino people and try to get them to regulate an online financial industry, and they just don't compute. And so I think it's the same in Colorado and Indiana, and I'm talking about these 2 states because these are the ones I have direct experience with. I think it's the case where the group in the government that regulates the physical casino is also regulating the online sports betting. They're completely different issues. So I think I would blame the legislators for creating these things, and also I think on a state level it's just too small. I think the regulation should be on a federal level, and I think the tax should be on the state level. I think that's the right way to, like, you could have one of the federal government regulate sports betting in all 50 states, and each state could just decide what they want the tax rate to be, and if they can go live or not. and that would be the right way to do this. But trying to ask physical casino regulators to do sports betting, I think is a bad way to set it up. So I wouldn't blame the regulators. I'd blame the legislator on that.
Yeah, you would say that though, wouldn't you?
Would I?
Wait, yeah.
Well, that was cool. Thanks for the news roundup. Listeners, if you have any comments or feedback, I'm experimenting with different formats. I think I enjoyed this. I think it was a nice way to kind of recap the industry news, and thanks for jumping on. Anything you want to say, Brad?
No, thank you for having me. I'm always interesting, as I say. Always good to hear from you. You always got a few good quotes.
All right, catch you guys later, and we will post another episode next week. Thanks for listening. Bye.